Mrs. Saxena, I'll come to you. When we are looking at that $30 trillion vision of 2047, there's also an aspiration that the loan book will also grow 10x. But at the same time, we want to understand how do we ensure that the system does not collapse under bad loans pressure?
Right. I think that's very, very important point that when we are having an aspiration to be a developed nation by 2047 and we are having an aspiration to be a 30 trillion, the story has to be a sustainable story. So how do we grow and how do we reach to that milestone that we have in mind? It has to be a very growth, I should say, which is a compliant growth, compliant to the regulator requirements, and using, keeping in mind all the underlying risks that you are going to be encountering, whether the usual business risks or when we use and leverage on technology to help us achieve those milestones. We are exposing ourselves to newer technology risks. So how we are understanding those underlying risks, how we mitigate those risks, and how we go about it. I think one point we should understand that today when we are around 4 and we are to grow 7 times the size that we currently are, while banks will continue to be an important player in having this enabled in the system, but bank alone will not be sufficient to ensure this kind of change that we are looking forward, countries aspiring. So it has to be, I would say, bank, not bank dominated, but bank led. So there'll be other in the ecosystem, in the architecture, like the DFIs. They will continue to play a very important role. When we are talking about large infra projects, banks typically, if you ask me, the liability profiles are not long term. And when we are out to fund long-term gestation infra projects, we have problems, we have risk, we have regulatory concerns around that. So there'll be a role important from DFIs, InvITs, other innovative models will be required to see that along with banks, they also are growing and helping the country achieve this aspiration.
Okay. With the advent of so much of digitization, which public sector banks have utilized to their credit over the last 10, 15 years or so, in the next 5, do you see branch networks sort of losing their meaning? Banks such as yours, banks such as Bank of India, deploying much more money into digitization of their services and reaching a wider audience electronically rather than physically?
I think to discuss and better understand this question, we'll have to go back to the COVID days. COVID taught us a couple of things, and it created that compulsion on us to keep the normal operations growing by using technology. And I think banks did leverage on technology. A lot of technology adoption has happened in the banks during the COVID time. And I think a lot of traction in terms of the top line and the bottom line has been contributed on account of technology. When we have seen business have been digitally sourced end to end, the business that is sourced digitally has also been a profitable business because the cost of acquiring this new customer digitally has been on a very lower side. Having said that, what we have also experienced that it has not gone totally going the digital way. Now we have been for lately 1.5 years talking about being phygital. So there is a strong realization that banking 100% minus the customer and the client and the banker interface doesn't happen. So having that realization, you would see lately many banks, and in fact we have been one of the banks which are aggressively expanding into new geographies, and I have a robust board approved plan of opening 1,000 branches in 5 years. And that's how we now look at even the private banks for the last, I would say, 1 to 2, 3 years. There is a data in front of us that maybe because of the CASA, the low cost component of the deposits, they have been opening branches aggressively in the rural and semi-urban centers where typically the PSBs used to have some monopoly. So I would say the 100% technology taking over will not happen in India, at least for the time being.